Welcome everyone, this is Bob Kendall. This is a report for Friday, February 28th, 2020. This is the final trading day of the month, and this is going to be a big day. There's a number that is going to be really critical that I'll talk to you about later. It's 3019. Yesterday's markets were just horrendous, and we saw massive liquidation coming into the close. Most likely was mutual funds squaring up their trades. There's probably a lot of liquidations that came in yesterday. I call them the get me out orders, which is somewhat of capitulation. We saw volume spike by 41%, and typically when that happens in a big down day, we do have kind of, a climactic situation going on. But unfortunately, I'll show you here in a few minutes, overnight we're back down anywhere from 0.6 to a full percentage point in the futures again. And a lot of this has to do with what's going on in Hong Kong. There was a spike that happened about 2 hours ago. It's right now 11:30 roughly Eastern Standard Time PM on Thursday night. So I'm up watching the markets late, watching and just seeing what's going on. And there's been a lot of activity yet. It's just amazing. There's tremendous amount of illiquidity in the markets. It's just a really crazy time that we've seen. And I compared in yesterday's video, I talked about the 1987 comparison. I'm going to show you some charts here shortly that will show you the 1987 configuration and how it looked then and what we're seeing now. It's a little different, but you'll see some of the comparisons and some of the differences. So there's some questions that need to be answered, in my opinion. And if you notice the very bottom item here, there's going to be a conference call, and there'll be an email going out with the link. It'll be a Zoom meeting. We're limited to 100 participants, so get there early, and we'll see how everything goes. But it'll be 12 noon Eastern time. I will put a link in the down below on this listing on this for this video. And so there's just a lot going on. So number one is will the panic continue? I think it will. I don't think it's over. And there's a couple things that depend here, and I'll show you on charts here in a few minutes. So be patient and listen to the dialogue here. This is important. The panic's likely to continue, but tomorrow's close is going to be everything. Now, we could be setting up the ultimate Black Monday. We could be really flashing back to the whole scenario that happened in 1987. Now, I happen to be old, and I was there and trading in 1987. I saw a lot of people get wiped out. I happened to do okay, but that's not what we're here to talk about. What happened was that decline started weakness on a Tuesday. Wednesday, Thursday, Friday it collapsed, and then Monday was a big day. So I'll show you those comparisons and unpack that a little bit further. The other thing I'm going to talk to you about in this particular presentation is how low is low, and that otherwise we're going to look at some possibilities and some targets. I'm anxious to see what comes out of our system on Monday or on Friday night. We are expecting quite a few sell orders to come out, obvious. I'll talk to you about that, and we'll actually be on Sunday night's video. You'll definitely, if you're a VPM or a portfolio expert user, you're definitely going to want to watch that show. I'm going to have some guidance and some thoughts on how to handle what's about to come at you. So the next question is, will the Fed show up and save the day? The answer is they may show up, but I don't think they can save the day. I'm not sure adding money into this market will do much. The only thing that we've seen in the past, and it goes back a lot of years ago, I talked about the secret buyer that was going on. This goes way back in the 09-10 crisis. The secret buyer that showed up out of Brussels, and it'll be interesting to see if the Fed plunge team shows up. It's shocking that they haven't showed up already. I'm not sure what's going on there, but it appears they're actually letting things just run their course. And so we'll keep a close eye on those guys, but you're obviously, with the rates dropping down like they have, we're most likely looking at some kind of drop in yields and all that stuff. The other thing I will discuss, and this will be probably this how to handle adjusting risk going forward, will be more on the conference call tomorrow and probably on Sunday night's video. But I will touch on all these subjects tonight because I think they're really important to understand. And so I would say don't expect the Fed to save you, and if depend on what type of strategies you have. If you're a customer of ours that are utilizing our software, we've seen anywhere from 20 to 35% in cash. Some folks are still pretty much fully invested because this is the first real black swan we've had to deal with. I was talking with an associate earlier today that's been around with me for about 8 or 9 years, actually longer. And the bottom line is, every other situation we've had like this, even 9/11 when that happened, we tend to be in cash. The markets were showing weakness, and then the collapse happened. In this case, like we were printing an all-time new high last Thursday at 33.93, and here we are 1 week later, and we're in the 29 handle. So pretty amazing what's happened here. So a lot of movement, very quick, nowhere to get out of the way. In the video yesterday, I suggested early in the day you should lighten up, do something. I think from those advisors that are listening, it's important to understand that showing and demonstrating that you're doing something in a situation like this is pretty important. Even if there's a risk of markets bouncing back and all that stuff, I need to point out something here. Even though there's a potential, a bottom or a low to come in place and some kind of rally back, that rally back isn't going to be to all-time new highs. This market has been broken at levels that you can't even imagine. And so there's not going to be, we most likely scenarios whenever a low gets in place, we're going to spend, this is beginning of March, we're probably going to spend all the way through into June or July just chopping around if we can find a stabilization point. I'll talk to you about some numbers here in a few minutes. I think that point is still lower. I don't think we've reached that extreme point at this time. There's way too much going on. There's too much news flowing around. There's too much of the hype on the coronavirus, on COVID-19. All this stuff is just continuing, okay? So there's no way to throw that off the table. They're going to continue to be a ton of volatility, and so far all we've seen is one-side volatility, with the exception of yesterday was insane, the volatility. Early in the morning, we traded all the way down to the 3007 level on the futures. They bounced all the way to 3096 and a quarter, and then declined 150 points from there to go all the way down. I'll bring it up in the charts, but just off memory, all the way down to the, I think the actual low in the final 15 minutes was around 29.58. So we're talking an insane movement. And once again, I think all this liquidation, there was a report that came out that there's 8,400 people being watched out of San Francisco area, something of that sort. That was kind of a trigger that brought in a lot of emotion, and it just fed on itself. So let's go ahead and take a look at the technicals here, so I can start to set up some of these points, like why the panic's likely to continue, how low is low, and then at the end, at some stage here, we'll talk about how to handle adjusting risk going forward. And in fact, why don't I just go ahead and cover that element just right now while we're off screen, because I don't want the charts to distract. we're going to see a lot of sell signals come in. And my suggestion is that we could see a lot of strategies that we have go to 100% cash. And I'm going to tell you that most likely when you see what I'm about to show you, that you're going to want to do, depending on how we close tomorrow, and I'll set that up for you here in a minute, you're going to want to do these trades. Because this thing, the 1987 comparison, you know, I saw a report on CNBC that said something about this is the biggest, the fastest move to, you know, being in a correction phase there ever's been. That was a completely wrong statement. In 1987, the market dropped in 4 days by 40, I think it was 44, 47%. We're talking 50% decline in 4 or 5 days. This isn't even close to what happened, how fast that moved. We didn't go into a corrective phase. We went through bear market and then doubled that, you know, the whole 10, 20% situation. So let's go ahead and take a look at the technicals here. In yesterday's broadcast, I talked about the 200-day moving average, and that was going to be a key point. Well, you can see this bar right here that I have. We not only traded to it, we went through it like it was non-existent. And I talked a little bit about these PPMs now. The amount of downward acceleration is just out of control. So at some stage, this thing will find a low, we will bounce, but then there's going to be whatever low we set up, whether it happens in the morning or it happens on Monday, there will be a bounce, and then there will be when that bounce happens, we're going to hit some retracement level, and then we're going to retest that low, most likely take that out. But if you look at this momentum, it's absolutely insane. The other thing that I want you to pay attention to, and this is on all the charts, and I'm going to show you that going through the history of the S&P 500, I don't think there's ever been a gap. And a gap is where it closed. You can see where my mouse is up here. Closed at a level, and then the next open was way down. And this gap through all the moving averages, I'll show you on the intermediate and the weekly charts, it did the same thing. Let's go ahead and take a look at that. And you see we gapped all the way under the 10-period moving average. On last Friday, that average was still up, and I pointed out some stuff on the PPM. So if you're just seeing this video, watch yesterday's video to make sure you have a context. I'm not going to go through all the same elements that went last night, but you can see that this minus 0.74, and everything is turned. PPM 1 and 2 have turned negative. PPM 3 still has some positive, and this is going to be an interesting number. And I talked to you yesterday that the key numbers were the 30.65 and 30.45 levels. Well, right here, the 40-week moving average is 30.61.95. If we were able to rally back and get above that, then that would be a super positive. At least we would hold that line. And that would tell us, when I talk about how low is low, that would tell us there's a possibility that would raise about a 40% probability that we've actually seen a low of this sequence, okay? If we close below that number, and I'm going to show you, and also remain underneath the 200-day moving average, we're going to still have some downside. And the scary part of this is there's a couple levels that we're likely to go to, and that's on the monthly graph, which I'll show you here. So when we start to look at the monthly, you'll see this big reversal. I mentioned a number early on, the 30, right here is the 30.19 level. And if the market were able to rally back above that level, which is the way this market's trading, is no big deal, except for right now we're down. Actually, we're all the way at 29.36 right now. So from where we are, we're about to open close to 45 to 50 points lower on the S&P based on where we are right now. So we're going to be pushing down toward this blue cyan line, which is that number, let me just bring that up on the data so you can see this. That is 28.94. So all of a sudden, we're going to be pushing down to this 28.94 level. That's going to be stop number one. And so the key levels tomorrow will be 30.19. And if we were to get back above the 200-day moving average, the 30.40 or the 30.60 level, which would be a huge rally, especially considering that futures are now they're trading at 29.35. So to get back above these numbers is going to be almost a miracle. And not only that, this is the monthly chart, and this chart closes out tomorrow. With Friday's close will be the closing of the month. And if we finish below this number, and actually anything under 32.84 is going to be the magic number on this chart. If we close below that, which has probably a 70% plus probability that we do that today on Friday, then we're going to confirm the outside reversal bar. And I talked about this yesterday. We made a new high in the month of February and just last week, and then we've plummeted here, and now we've penetrated to the 10-month moving average, which right now is at 30.19 level. So if we rebound and stay above that, it's going to be a little encouraging and give some probability that maybe this thing is completed. I talked about early in the opening dialogue that this thing just isn't going to stop here. It's going to reverse and go up. So when it comes to those of you using the software and adjusting risk for customers and doing those things, whatever you sell at, this thing is going to grind. Worst case, or I guess the best case, it's going to stay above 30.19, maybe 31.5 if we got above this number. But the probabilities are still stacked. You can see all the PPMs, that's these indicators down here, are all pointing to more downside, suggesting we're going to probably go down to at least a 28.94. And like I said, the futures aren't that far from there right now. That'd be an easy spike in the morning. So we could hit that, but the closes are going to mean everything. Like I said, Sunday night, I'll cover all this stuff to really give you some strong guidance on what to do from the standpoint of the trend. And this trend that we're looking at here, this major weekly trend, is completely done. Okay, this is how a major trend ends. And I've talked, those of you that listened to my broadcast or customers or read my commentary over the last several years, I've been talking about this generational high, and I still think we are at the point where this is likely to be the end of this rally, and we're going to start to see a larger correctional phase, and possibly going down to these numbers I just talked about, the 28.94. The next number is 27.08. Now the 27.08 level has been, I'll show you right here, this has been this low that we had back in 2018, was right on that 40 period moving average. That was also the 200 week moving average at the time. So we could continue to head down to this 27.08 level, and this number is rising a little bit as we go. So it might be 28, 30, or 40 as once things start to move forward. And I'm just going to back up for a second and go to the weekly chart for a second, and you're going to see 26.32 is the 200 week moving average. That is exactly where the last bottom came in place in 18. So you're going to have a range between 27.09, 26.32, and we can start looking at some Fibonacci relationships. And as we see more of these markets going forward, I will unpack them further so that you know exactly what's going to be likely. But just count on at the moment that every trend that you know, and not all the stocks have been crushed, but most have, especially the larger cap stocks. I think you're going to see a lot of liquidation next Monday, depending on the close today, unless this thing were to rally back like unbelievable rally on Friday, which certainly is possible. If it closed, like I said, over 30.60, that would be amazing. It could save a lot of signals coming out of our system it could keep a lot of folks from throwing orders in on Monday. But as it looks right now, if we close weaker than we did today, we're going to probably see a lot of liquidation orders following through for Monday, and that's going to be another huge day. So we could easily go down if, and now what I'm going to do now is I'm going to show you what on this, I'm going to go to the monthly graph here, and then I'm going to show you exactly what the 1987 market looked like. So bear with me just a second. Okay, so we're looking at 1987. It's we did not get the outside reversal that we did this time, but this is a much different chart. But I do want to point out, and I'll bring you back to the current chart just to compare this. But what happened is we went right to that rising 40 period moving average in the crash. And absolutely, this is almost identical setup. So if we go to that 40-month moving average on the current chart, that was the 2708 number that I just discussed. So we still have an upward slope. It's at 0.79. I'll show you, it's at 0.79 right now. The numbers on the left are still valid for the current. But what I want you to see is this pattern is identical. So that would mean if we're going to, this is on the 1 monthly bar, it's going to have to be a different setup because tomorrow will be the last day of the month unless we collapsed all the way down to 2,700, and that would be, 270 points on the S&P. I don't believe that'll happen, but we will see weakness coming into March and a continuation. And like I said, everything's pending on how we close tomorrow. 3019 above, that's okay. 3060 or better, 3045, 3060 close, that's going to give us at least a place to breathe and see some stability. But even then, that could set the tone for a lot of liquidations. This thing is not going to get out of trouble very easily. Okay, so this is 1987 we're looking at. And, so you can see that. Now let's go back to the current market. So as we look at the current market, you see we have this nice rising 40 period moving average. And what this would do is we'd go straight through to this average, and then that would be the point where we bottomed. And in 87, let me go back to that for just a second. So I want to look at here we are in 1987. What I want you to see, I think I can forward this just easily. Yeah. So look how we hovered that on that 40 period moving average, and it was by 1990 we were making new highs again. So this configuration could be, this thing is so identical. I know I've seen other videos and people talking about how it's identical, but this setup right now is about as close to perfect as there has been. So what would happen is we would run down to that 2708 number on the current chart. So let me go back. So keep this in your mind there. And let's go back and take a look at the current. So what you can see here, this upward sloping line, that's 2708. It's going to be a little higher. So we go straight to there. We can find stability along that line. And that has been a line. I've been doing this show, I think we started in 2014. And I've been talking about this green line, which is the 40-month moving average, going back to the beginning of that show, talking about the rate of change. You see, this thing has been steady. If you wanted a dynamic trend line, this 40-month moving average is your best long-term trend line. And it's still rising at 0.79. We'll see what happens over the next couple months. But this setup is perfect. So I would argue right now that we're going to somewhere a minimum of the 2894, but most likely we're heading for 2708. And then it's going to be a grind because what you're going to see in our database when I cover the markets on Sunday night, you'll see what's going on with the database and what's likely to be setting up as far as we're going to have to rebuild this thing. This is like Humpty Dumpty is broken, and you're going to have to rebuild this piece by piece by piece. And there's not going to be any, like I said earlier, there's not going to be any quick save on this deal here. So I think I'm going to finish this video here, and what there will be on Sunday night, there will be another video that you'll be able to watch. I need to see our order run, see what kind of sell signals, see how many trends have been broken, which I suspect is a lot, considering we were 70% long on the database. So there's still a lot of stuff, but a lot of those longs, by the way, probably about close to 30% of them are bonds, which have kicked in substantially over the last several months. So it's not just all equities in that number. So anyway, thank you so much for watching. I hope you found this helpful.